Hello, Maverick traders. Welcome out to your currency midweek update, May 4th, 2022. Corey here with you. Quick reminder to make sure that you follow your trading plan. Today, of course, is Fed Day, and so we're going to be trading US dollar in all likelihood here together. Let's talk about markets. Maybe even, well, let's do a little bit of a review and then we'll get to the US dollar because there's some important concepts and levels and things to be aware of as we move into the Fed meeting. So markets, stock markets are in a downtrend. Markets are still kind of in this adjustment phase. They have to price in all of these rate hikes that are coming. The fact that we've transitioned from quantitative easing, which is money printing and a lot of liquidity being put into the system, to quantitative tightening, which is basically draining liquidity out of the system, raising rates. It's a change in dynamics. And, if QE pushed stocks up for many years, well, QT can kind of hurt stocks for a period of time. US dollar is at a major, major long-term resistance. We're going to look at that a little more closely. Japanese yen is kind of choppy. It started the year really rough, and then it had that big exhaustion bottom, and then went choppy and sideways from there. The Canadian dollar has been strong, but kind of looks like it's moving into a consolidation a little bit. I would focus on the Aussie here recently. It's really looking like it's gaining momentum here. RBA meeting, they raised by more than expected. They were expected to raise from 10 bips to 25. They went from 10 to 35, and the Aussie's been trading pretty well since then. Cryptocurrency kind of struggling. Oil looks much better than gold. We had this weird dynamic where gold was trending higher and US dollars were trending higher. Of late, that has certainly diverged. So now you have US dollar has rolled over to the downside, and you can see that, or pardon me, gold has rolled over to the downside, and you can see that US dollar is, well, very much strong and up there near the highs. And that's where I want to focus a bit of our attention, is really turning to and looking at the US dollar, because I think that's going to really kind of tell a big story here. So I'm going to jump over, and this is the US dollar index. This is what they call the Dixie. Probably in currency land, the number one most heavily watched and followed chart there is. And maybe in terms of doing this, we'll kind of create it a little bit larger. Let's just kind of tweak some things here. I added some price labels so that you can see it. And as you look at the price labels on this, you can kind of see the numbers and where we're at here tell a story about how critical this area is. So here is where the US dollar finds itself, and what's significant about that. Well, clearly this is a major resistance point. This was the 2020 top. This was the 2017 top. It's the highest we've been in what, a couple of decades, right? This chart, the only time it was higher than this in the US dollar was basically, you'd have to go back here to the early 2000s. If you look at some other critical levels in US dollar, you can see kind of this 88, 89 level. You can see down here around 72 or so. These are kind of your key levels in terms of the chart, and that's where the dollar has rallied to. Now, it's gone vertical, it's extended in the short term, and this makes it pretty tricky because you're literally at resistance, right? We can see that. And one would anticipate a breakthrough, but a couple of things here. The problem with breaking out right here, right now, is you've got no stored up energy. If we really think about things as being based on supply and demand, what does that mean? Well, demand is prospective buyers, people that are willing to buy but haven't done so yet, right? So here's your buyers, and these are your sellers. These are people that already have it or willing to sell and so forth. And there's this, sometimes there's equilibrium. Sometimes one group has a lot more than the other. In the short term, as a trader, you know that there will be buyers on the breakthrough, or at least that's in all likelihood what occurs, right? You start to break to the upside, it's going to bring in buyers. Some of them want to be buyers, some of them are forced to be buyers. What do I mean by that? Well, if you start breaking resistance and people know that it's happening, you have people that'll come in to chase it. They want to be buyers. You have other people that don't want to be buying, but they're getting stopped out. If you're short the US dollar and your stop's up here, it's a short squeeze. You got to buy back your short position. So there are those that want to buy and those that are forced to buy. But anyway, you slice it in the very short term, it's likely to bring buyers. The problem is you've exhausted a lot of the buyers by going vertical up to this level. If we think about it big picture, you've used up a lot of buyers just to get back to this zone, right? How many people had to buy and buy and buy and buy and buy to push us this high? And we're talking about, you know, literally billions, trillions of dollars, in terms of FX markets. So what you'd like to see, I mean, if you're a bull, you'd really hope that we would back off from here and maybe create a little consolidation, like create a cup and handle, create an ascending triangle, create some sort of backup here where you pause, you kind of rest, and you recover. It's like running a marathon. You need a recovery phase because we've just gone through a big race. We've been running to the upside for a long time. Now you're telling me to keep running? No, I'm exhausted. I can't accelerate that far unless I take a big rest and a big breather. So, in all likelihood, that's where the U.S. dollar market's at. Is the best thing for U.S. dollar would actually be some form of resting phase. Now, remember, this is a very, very long-term chart. So we're talking about big picture in that concept. I think in the short term, odds favor us trying to pierce that high and just kind of seeing a big sharp move. And then, in all likelihood, you fade off and you get this kind of consolidation. Most people think of support and resistance incorrectly. When you talk to someone about support and resistance, most people think of it as like a rigid, as though it's plywood. It's something hard, it's cement. You can't get through, and if you do, that's guaranteed. It's more like a mattress. It's more like it's squishy. In fact, when you come back to support, you don't worry about the fact that this dipped to 88.15, which is a little lower than these numbers here. I mean, that's kind of how things work a lot of times. You kind of sink into support just a little bit. You kind of sink into support. You kind of hit resistance. This high was a little higher than this high. That doesn't matter. That's kind of how things work. It's a zone. So I like to think of them as kind of a mattress of sorts. I think in the very short term, we blast through there, which should be, for the short term trader, the take profit. But it's a good trading opportunity. It's actually a good opportunity to buy US dollars for that piercing. And then as people kind of rush in, the short sellers are scrambling to cover and so on. That's where you take profits. And then I suspect we'll see a few months of kind of weakness and consolidation and so on, that rest before possibly the next big run. Is it possible that this never goes above there, that this resistance kind of holds and we just fall apart and we fade off, and that upper end of the range holds again? Possible. I think unlikely. I mean, my guess would be that eventually we're going up and through. I just don't think it should happen right here, right now. So the short-term trade, for a couple of days, do we probably go up and through there to kind of suck in some buyers and stop some people out? And that's kind of how markets work, is they're probably going to create, that type of dynamic where everyone goes, oh, we're breaking out to the upside. Well, really, it's kind of a fake out of sorts, but it's a good short-term trading opportunity, be it on the 4-hour or the 1-hour charts and that sort of thing. So I think I would like to be a US dollar short-term trader and then anticipate that's kind of the flurry finish. And something that we've talked about previously, we talked about, let's just jump over to these charts. We talked about the Japanese yen. It was like going, 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 going. And then this was kind of the big final flush. And or maybe we even talked about it here. Either way, it's basically gone sideways since, right? And I actually think it was this one that we talked about as kind of being the finishing, kind of the exhaustion. And we went even a little bit lower, but basically we're at the same or even higher prices today. And that's kind of where the dollar is probably at. I don't see a big exhaustion top here. I see it kind of stalling underneath resistance. And I think what happens here is we kind of fake out. We break up above here and then we fade off for a few months or what have you. So that would be my expectation for trading this. And I'd be more inclined to kind of think that the Fed meeting today is going to be a hawkish tone. Um, they're more likely to raise rates and be hawkish than not. And I think they've got to get out ahead. They've got two main mandates, right? To keep inflation, keep price stability, as they say. And in addition to the price stability side, they've got good employment numbers, which is the other mandate. So they're not worried about that. It's inflation, it's price stability that's the issue. So in the short term, for the next couple of days, we probably see that kind of finishing touch on this. What's been a really, really good trend in US dollar. I mean, just look at it. If we come into a really short term chart, you'll just see it's been a nice run. So probably one big spike here for maybe a couple of days to put the finishing touches on that is how I would see it. Now let's look at a couple of different things here in terms of the chart. Where did we leave off here? So let's look at this in terms of performance. You can see in the crypto space, a leader and a laggard, but basically around neutral. In FX, I mean, CAD I've really liked lately. I like Aussie this week. We tried to trade the Aussie and we missed it by a couple of pips. We tried to short pound, get long Aussie, and that was too bad. We traded that live on Monday night, the RBA statement, and just missed. I mean, by a pip or two, and that thing is gone, 100 plus pips in that direction. So Swiss franc is having a really bad week. As far as other markets, gold is struggling, oil strong. Energy, like I said earlier, just looks a lot better than gold. Gold, you know, it probably isn't kind of at that last line of area where it needs to hold. We've talked about gold quite a bit, long-term charts and so forth, so we could do the same thing again. If we come over to GLD and we take a look at it on a longer term scale, the reason I say it kind of needs to hold here is if I were to call this kind of the handle area, this is the way I see it. And look at where we're at right here at 174. I think if you really start to break below that, 171, 170, 160, that's a deal breaker of sorts. So I think it's still hanging in there, and this could be a dip worth buying. And especially if you kind of think that the US dollar is going to fade off for a couple of weeks and kind of consolidate before it makes the big breakout. But it is odd. One would anticipate that something's got to give. Does the US dollar fail or does gold fail? Because it's kind of hard to expect a huge, huge upside move in gold with a big multi-decade breakout in the US dollar to the upside as well. Right now, US dollar is winning. US dollar is up. It's at the highs. Gold has fallen off. Given that piece of information, we'd kind of have to expect the US dollar to win in that competition, I guess you'd say. So that would be where I'm kind of leaning on that. Let's look at a couple of these charts. So the S&P bouncing, but I really anticipate we'll probably bounce a little bit further here in the S&P, maybe up to 425 or so. I think there's a couple of day rally coming, but that's probably about all it's got. And then we should not only retest the lows, but kind of like bending metal, will probably break that low. There's, like we talked about with currencies, I think you're long Aussie. I think you're long US dollar for very short term. Kind of, I'm looking for it to make the final surge to the upside. On the bearish side, British pound is an obvious candidate. Swiss franc, you'd have to add to the mix as well. Not really interested in crypto. I have to say those charts look pretty wishy-washy overall. So let's look at a couple of things here in terms of grading. Below the 20, below the 50, and slope is downward. Not good for the markets. So more bearish, big picture. The rest of this week, we know we've got the Fed coming up shortly. They're expected to go from 50 to 100. That's not going to be a surprise, but it's going to be more about the guidance. What do they suggest in terms of expectations and what's expected to happen going forward? Is it going to be a situation where they raise by 75 basis points at the next meeting, 50 basis points? What's the guidance? I think it's going to be a very hawkish tone, which should be theoretically good for the US dollar if they really come in and send some shock waves through the markets that way. We'll see, but that would be my anticipation. We get employment data out of Canada and the US on Friday. So let's look at a few pairings here. And I see a couple of comments, or a couple of requests, I should say, for pairs. And we can take a look at those individually. Before we even do that, maybe I should just kind of give my breakdown on things. So here's how I see it. Let's go into just my kind of breakdown is as follows. As we go through these trend and velocity, we're a little bit, we're going to have the Fed meeting, so we're a little bit more focused on US dollar than anything else for a trade here in the next few minutes. The trend on the dollar is strong. Right now, there's just no velocity. It's been going sideways the past couple of days. I'm okay with just as it starts to show some velocity, theoretically, again, that should turn up. That's what we're going to be looking to go long. The other long candidate, I think, is Australian dollar, which has good trend and good velocity right now as well. The CAD, looks great. I just think it kind of ran into a little bit of an exhausted phase. It's just a little tired as I see it. On the bearish side, I really have to think pound and Swiss franc are the obvious candidates. Again, they have trend and velocity, trend and velocity. So, I could add here, we don't have it listed, but USD today, and for kind of that final move. When I say final move, again, I think that dollar would act like Japanese yen. You know how the yen flushed to the downside? Now it's just been choppy for the past couple of weeks, mostly sideways. I think the US dollar, same thing. It should flush out to the upside, kind of have that big, capitulatory moment, and then probably be choppy for a few weeks. I would expect it to have kind of a downward bias after that, but let's look at that a little bit more closely. So if we come back to the charts, now that we've kind of talked what's what here, so let's come back into these and we look at it from the standpoint of, trend and momentum. Trend is strong in USD, clear upward trend, but we know where it's at. It's kind of up at that level of resistance. The momentum's not there, but I suspect it's not going to take much to get it there. This to flip into a buy, this to start breaking to the upside. We're jumping the gun a little bit on the velocity, but I still think that's the trade here in terms of expectations for the US dollar in the short term. Now I mentioned well, let's go to the other bullish candidate, Australian dollar. Aussie came back toward the 50 even kind of bounced around it, up, down, but now there seems to be a resolution. And the resolution to this should lead to higher prices for the foreseeable future. You know, if you ask me what do I think is going to be one of the better performers in the coming weeks, I would put the Australian dollar at that, you know, basically the top of that list. I'd still put the CAD there as well. Canadian dollars, great. It's just, I feel like that was a little bit of an exhaustion moment. Now it's already rested for a few days, so you know, I still think you can buy CAD. I don't have any problem with that. Probably a good one to put on our bullish list as well. I'm kind of splitting hairs there a little bit. It wasn't some major exhaustion that should derail the Canadian dollar for a long period of time. It's more that I haven't been trading it the last couple of days, but that's good. That's good. I mean, it's been resting. It's been doing nothing, so I think you can come back to that one for sure. On the bearish side, pound continues to be weaker performer, downward trend likely to come and pierce the lows. And then Swiss franc, somewhat out of nowhere. I mean, big consolidation for a few months and broke support. This one you got to like. It's on, usually there would be some correlation between Swiss franc and euro. Right now, Swiss franc is just breaking by itself, just on its own. It's got its own set of issues there, country-wise and so forth. And you can see it's a good solid breakdown, heavy, you know, criteria here, big candlestick after a big consolidation. I think you continue to focus on Swiss franc downside trades. So that kind of lends us to a few ideas, obviously. Let's just make a little note up here. We say our bull list and our bear list. Our bull list for today, USD, and for the rest of the next few weeks, I'm going to put CAD and Aussie up there. And our bear list, we're going pound, we're going Swiss franc. Obvious, you know, candidates. And so with that in mind, we can basically look at combos of all of those, right? We come into our pairings and let's just look at a few. So we go US dollar, Swiss franc. Would you rather buy or sell? Now we know it's extended, but again, we're talking about for a short-term trade, for a pop, for the final kind of finishing touches, and it has trend and it has momentum. And if you look at it, the US dollar versus the British pound, it'll be the same thing, but to the downside, a little bit, you know, not as stretched. It's consolidated for the past couple of days. I have pound USD is certainly one of the candidates for trading today on this event. Let's go CAD. So we've got CAD pairings. We'll go like this. Let's kind of come down here. Maybe we'll go, let's start with the British pound pairs. Where'd they go? Am I not seeing it? Oh, there it is. So here's pound versus the CAD. You can see downward phase, downward trend there. You know, I like it. Certainly a good candidate. And then we need pound versus the Aussie. Again, downward trend. Bearish Bollinger Band type of criteria where it failed against that, did not break above the 50 and reversing. I think you can continue to look at pound Aussie for downside trades. And then we've got to go, what are we missing? Oh, CAD. So we can go CAD against British pound. Downward phase, downward trend, downward momentum, no problem there. And then we had CAD against the Swiss franc as well. And I'm not seeing that one. We can go another route and just do it ourselves. Punch it in, CAD, Swiss franc, just breaking out of a consolidation there. I like it. You know, Swiss franc is the, you know, it's very fresh breakout. So when you look at these charts, you know, CAD, Swiss franc, it really had a good resting period, and it's just breaking out right now. So you get any little choppiness, like come into a 4-hour chart on this, come into a 1-hour chart, and you get any little pullbacks, any little dips, for an hour or two, are probably just an opportunity to buy in on very, very minor weakness in the chart. But I would continue to look at it. Now, as our area of focus today, we're going to focus on those US dollar pairings for the rest of today. So we're going to start with pound USD as kind of our area to look at. We know the dollar's kind of up against that resistance, and my thesis is that we're probably going up and through. Look at the chart setup in pound USD. I didn't draw that trend line very well. Maybe I'll use their drawing tools. Whoops. And then it didn't draw it very well here. Try and make it a little easier on us. We'll snap a little support level in there. Draw our trend line here. And you can see kind of that downward trend, that downward phase. Sometimes it's nice to just kind of thicken these up, make them really easy to see for people. But that's kind of the thesis that I have, is that ultimately we're going to break to the downside in pound USD, and this is an hourly chart. If you were to change to a 4-hour chart, it's not going to change much. You can see the consolidation. You come into the daily, we've already looked at that, broken support way back here, down, kind of a low base, consolidative type of pattern. But remember, we're not looking at this like, hey, this is a great candidate for a trade for weeks on end. This is probably just a trade, just a momentum-based scenario. To be prepared, I think what we're looking for more than anything else, let's expand our order view here. Why did that not work? Maybe it wants me to slap it on somewhere. There we go. So I would just have kind of an order ready, and then usually what I do is also attach my bracket orders, and we can put our criteria in here. So let's just put in a target. We'll just throw in some numbers, and then we'll be able to see them and just kind of move them around. So if you look right here, you can kind of see the lines. We have a hypothetical entry, we've got a hypothetical stop loss, and we can nudge that stop loss where we want it. And then we've got a hypothetical target. Well, we can kind of bring it down here. And I frankly, would be inclined to probably take off half of the trade at this, lower level, and probably leave half on. You don't have to risk a lot, but what we're looking for is an energy burst. So what I'd be looking for, maybe we even come into a little bit shorter time frame. Sometimes I find it helpful to zoom in too. Go the other way. If we zoom in a little tighter, you can see some of the numbers and so on. And this order, this sell limit, is just basically, a lot of times I'll even pull it down a little bit, the sell limit order. But the idea here is to have something ready that I can just transmit quickly and it'll go to the market. Now, this isn't the live trading platform, but I would just have something out there. And I've got it on another screen, so I kind of work between the two, but let's just bump that down even a little bit further. 124.70. Stop. I'm going to bump it just above 125. And that would be 36 pips of risk right there is all. I mean, it's not massive. It's, getting ready to short and having a stop loss that would automatically go in. We already got our target, and we can adjust those as needed. But I wanted my stop to be up here just above 125, and I want my target down there at the lower support. And my entry price, I just don't want to pay some really bad price for getting into the trade, but I want to get in if it's acting right. If it has a big energy burst to the downside, what I'd often look for is a big kind of gap in the chart that might happen right now. And if it bursts to the downside, it'll often spike back up, and that's when I'll transmit the order, is just when it kind of chops right back up. We'll hit the transmit, on our live platform if we're ready to go. And by the way, it'll fill at 124.70 or better, which a lot of times will fill you a few pips better. You might get filled at 124.75 or something. So I'm assuming the numbers are not out yet because we literally aren't seeing anything. This is not energy. I think it's a little delayed. Sometimes that happens. You should see it happen all kind of at once. You should see a big burst, and maybe this is what's starting to materialize right here. So see how it's starting to kind of burst a little bit, and that's not much of a burst, by the way. That's not an energy move. That is, we tick to the downside, and now we're, if we're doing anything, we're bursting a little bit, but again, not energy. That's not what we saw in the RBA. The RBA had a burst that we tried to take advantage of. This is kind of a slow bleed. And by the way, it's going the wrong way. So no transmit, no energy yet, and going the wrong way. So obviously the numbers are out and the US dollar's weakening initially. This brings about a separate question of, do we fade this? Which I'm not against, by the way. I kind of came in with even that as a game plan potentially. Like, what if we short it up here, put in a tighter stop up above this downtrend line, so pull our stop loss just above the high, short in this region, and then still can kind of target a move down there. And I'm not against that just in terms of the risk to reward. I think that's probably the trade here, shorting at around 125.18, 19 right here. I'm going to change some things and we'll just try it. So I'm shorting, right here, 125.18. Let me adjust my stop on my live order. Just make sure I like where it's at. So, this has it at 125.40. I'm going to tweak that just to 41, the figure, but 125.41 as my live stop. And we're just short. We're just basically fading this move. Don't trust it. What I think, my thesis is that the dollar, which I know is against resistance, so, is going to break and see this big flurry. And that's what I want to take profits on. If I'm wrong in this trade, by the way, we're risking, so we just got short at 125.18. Stop loss is at 125.41. Boy, that's very little risk for a pound pair, actually. It's not, there's no guarantee this is going to work, but 31 pips of risk, fading this Fed move, don't trust it, and think that the dollar is going to go in a flurry and kind of break that resistance, which would cause this pound USD to break support and really fade off. I like it. I like the risk. I like the reward. I like the probability. If we're wrong about this, by the way, we're going to get stopped out here in no time. Like within minutes, we'll get stopped out. If we're right, what'll happen initially is this thing will fade back to break even from the announcement, and that's going to make me feel very good about our prospects. It won't guarantee success. Nothing ever does. But if this can give away all of the post-Fed announcement gain, you're going to be in a really good spot, because then we might continue to see that fade to the downside. So I like the setup, and it's still just right around our entry, just right around those levels. So we'll see. But the thesis for me is really one that the dollar should kind of, it's possible that it just stops right at the penny, but that's not usually how it works. The market has kind of a sixth sense of humor, and there are a lot of stops for the dollar beyond that resistance. And that's kind of what we're playing for, is basically that this is choppiness before they really apply more pain. Remember, who's in pain right now are dollar shorts. That the trend has been dollar strength, and that's what we're playing here. We're playing the dominant trend overall. So I like being on that and betting that there's going to be more pain applied before this thing's all said and done. All right. Kind of fun. We'll see how that one pans out, but kind of a fun trade. Coming back, let's kind of tie a ribbon on this. So we had the Fed meeting. We've got payrolls as a live event on Friday, and then we'll, as always, send out the currency room. Watching for the big finish to the upside on USD. That's what we're now in. That's the trade we actually have on. Use good position sizing and make sure there's energy in the things you trade. When there's a lack of energy, which, by the way, today I expected more of an energy burst. If you're going to fade a move, you fade a non-energy announcement. And that's exactly what we've done. A lot of those that don't have energy, you can fade them. You know, the initial move or what have you, it just kind of gives that away. There's not a ton of energy, at least not yet, in that market. Hope you've enjoyed it. Have a great rest of your week, and we will see you next week for the currency midweek. Goodbye, everyone.